Hello, everyone. My name is Jim Hall, I'm the Affordable Lending Manager with Freddie Mac. It's my pleasure to be here with you today. I'd like to thank Sharon, Chelsea, and Mike at South Carolina Realtors for inviting me to speak at the Fair Housing Virtual Conference today. And I'd also like to thank my partner with South Carolina Housing, Claude Spurlock, who you'll be hearing from after I'm done speaking. And what I do, I partner with Claude with South Carolina Housing on business strategies with getting our word out for affordable lending to realtors and lenders through the state of South Carolina. I also partner with many housing finance agencies, throughout the country. My region is on the East Coast. My contact information is under my picture there, so feel free to reach out to me at any time. Freddie Mac is a government-sponsored enterprise known as a GSE in the industry. We were chartered by Congress in 1970, so we celebrated our 50th year in business last year, and we operate in the secondary mortgage market. And what that means is we don't have direct relationships with the consumers as realtors like yourself do. We're in the background, providing liquidity to lenders and housing finance agencies in the market. And our mission is to provide, liquidity, stability, and affordability in the marketplace and on the conventional lending side. We also have community missions. We're here to stabilize communities, prevent foreclosures, expand credit responsibly, educate home buyers and counsel homeowners, support affordable rental housing. And we have three main business lines. Single family, which I'm part of, and that focuses on 1 to 4 family dwellings. And we also have a multifamily division, which is 5 units and above, and also a capital markets division. We have 4 pillars that we promote, and this helps us lead the future of home. The 4 pillars are insights, education, mortgage products, and business solutions. With insights, we have a tremendous data and analytics group, which provides us, a lot of information that we provide to realtors and lenders and housing finance agencies in the marketplace. We also provide mortgage products, and we have a really nice menu of conventional mortgage products that you may have heard of. The main product that we offer in the affordable arena is called Home Possible, and that is where a product which a lender can use and deliver directly to Freddie Mac. Now, we developed a HFA Advantage program that is specific for housing finance agencies to use. We also have low down payment options, energy efficient type programs, manufactured housing programs, so our duty to serve program, and renovation programs. We also pride ourselves in education and training and also financial literacy. And as far as educating, we educate, the industry, like doing an event like this, or we go direct to the consumer with some of our resources and tools. So, we really take pride in, getting the word out there, because knowledge is power. And if you don't know about the programs, then you really can't do the best job, for your prospective home buyer. And we also have tremendous business solutions. And when I close out this discussion, I will go over, really valuable resources and tools that we provide to real estate professionals like yourselves. Now, we look at the whole environment that we're in as the affordable ecosystem. And as you can see, we put them into this bubble chart here. And it's amazing if you look at this, see how many people are really actually involved in the transaction with somebody buying a home and then it, going through the mortgage process. Yeah, Freddie Mac partners with lenders contractually and housing finance agencies. Um, Realtor associations, really don't use Freddie Mac because you don't make loans, but that doesn't mean you're not important to us. You're extremely important to us because the genesis of the transaction starts with you. So the more that you know, the better you are, to help that prospective home buyer work through this process of attaining a loan and attaining the dream of home ownership. So again, you see at the top of this, we have real estate professionals and loan officers side by side, because that's the important handoff. Once you, the realtor, gets the sale, has them sign the contract, you have to put that, prospective home buyer into good hands to be, go through the mortgage process as painless as possible, and to get them to the point of where they get approved and are able to obtain the financing. Now, housing finance agencies, they are very, very important to our ecosystem. And unfortunately, a lot of people don't realize what they are and what they do. They've been around a long time, some over 50 years. Prior to Freddie Mac, I worked at a housing finance agency. I'm from New Jersey, and I worked at New Jersey Housing for 12 years. And we took it very seriously as far as, what we were providing to consumers, as my friend Claude Spurlock does with the South Carolina housing. Now, housing finance agencies really came out of the 1960s when Lyndon Johnson was president. His vision for America was called the Great Society. And, he's well known for the civil rights legislation and the Voting Rights Act. But also, there was the Fair Housing Act, which was signed in 1968, which was intent on helping lower to moderate income folks attain housing. But Johnson's administration knew they couldn't do it all alone on a federal level. So they took the concept down to the states and counties and said, you are the experts in your area. We need your help to really get this out there, and so people can attain affordable housing. So that's how, organizations like South Carolina Housing came about. So what Freddie Mac does is we provide liquidity to housing finance agencies. So what does that mean is that the housing finance agencies have approved lenders who use programs, and then the housing finance agency will purchase that loan from the lender, and then they sell and deliver it to Freddie Mac. So the money we pay back to the housing finance agency allows them to continue with their loan programs. And so as I mentioned earlier, we launched the HFA Advantage program. That's our 3% down program. It's 97% LTV. So right there, as you can see, it's an affordable lending program. It beats FHA, which is 3.5% down. We allow for 105% total loan to value. What that means is if there's a second mortgage for down payment assistance behind the first mortgage, we'll allow that amount up to 105% total loan to value. Income limits are set by the housing finance agency, and Claude will discuss that later as far as what the income limits are for South Carolina housing. And also South Carolina housing will determine the home buyer education requirements on these loans. The real major factor that makes this affordable is there's chartered level mortgage insurance on these loans. So like I said, the role and impact of HFAs are really, really important for homeowners in your state. It's getting tougher and tougher for people to obtain affordable housing. With prices going up, that actually has an inverse effect for the first-time home buyer who's in the affordable lending world, because it makes it less affordable for them. And also, there's bidding situations, which a first-time home buyer who doesn't have a lot of liquidity, a lot of cash on hand, they could get shut out in this environment. So again, it's really, really important for you as the realtor to, to find them, the proper home, because, you're a fiduciary for them, as the loan officer is a fiduciary. The prospective home buyer is putting their trust in you that, you're going to deliver a home they can afford, and then the loan officer is going to, provide a loan program which is most affordable for them. So here's some highlights on the HFA Advantage program. Again, it's for 1 unit. It's either it can be used for purchase or no cash out refinancing. That's up to the housing finance agency. As I mentioned, it's 97% LTV, 3% down. All these loans have to be underwritten by the lender through our automated underwriting system, or AUS. And our automated underwriting system is Loan Product Advisor, also known as LPA. There's no reserves required. Again, we will defer to the housing finance agency if they require reserves. I always encourage anybody, if there are reserves, even though they may not be required, they bring strength to the deal. So on the application, it doesn't hurt to state that the reserves are there in a bank account. And as I mentioned, income limits are established by the housing finance agency, and we have flexible MI options. So it makes an excellent alternative and a much more affordable alternative to an FHA loan. So this illustrates the charter level mortgage insurance that I mentioned earlier. So when a standard conventional loan for in 97% LTV, 3% down, the consumer pays 35%. And as you see on the HFA Advantage program there in the blue block, they pay 18%. So the savings is almost half for a consumer to go through the HFA Advantage program, and it will save them a lot of money monthly and over the life of the loan. And one of the advantages of a conventional loan versus an FHA loan is that conventional mortgage insurance goes away when the balance reduces and the loan is at 80% LTV. On an FHA loan, the mortgage insurance is perpetual and it stays on for the life of the loan. And plus, they have an expensive upfront cost for MI on the FHA loan. So that's why if the prospective home buyer qualifies for this conventional loan, that's why it's a much, much better deal for them. Housing finance agencies have, reached the underserved for many, many years. And this is a good illustration that we have here, provided by our advocate in Washington, D.C., the NCSHA. And it shows the median income of single-family borrowers. And this was data from 2019. So all home buyers, the median income was $93,200. You see, housing finance agency home buyers was a little shy of $51,000. And so that is the lower to moderate income level of most home buyers that go through HFA loans. So that gives you a good illustration of the segment of the community that we're providing assistance to. Also, housing finance agencies often lead in providing loans to borrowers of color. Now, Freddie Mac has taken on a new mission, and we started a new department for equitable lending. So we're trying to, really, really reduce the gap of home ownership with African Americans. And as you can see here on this chart, NCSHA charted it back to 2001. The red line are loans made by housing finance agencies, and the blue line is the loans in the market. And most of the time, housing finance agencies are ahead of the curve in providing loans to minorities and the underserved. And now I'm in the home stretch. I hope this has been valuable information for you. And I'm going to go over some resources and tools for you that are a great value to real estate professionals in the marketplace. They don't cost you anything, and I highly recommend you check these out. So the first item here is our subscription center. And this is, a site that, won't spam you, and it's not going to be, a lot of information clogging your email, but it's going to be really, really important information for you. So, what you'll learn out of this is, market data, trends, insights, and you'll get alerts on training and education opportunities. So it'd be really important for you, to check this out, subscribe, and you'll get all the great Freddie Mac's insight that we provide. We also have the Real Estate Professional Resource Center, and this provides online resources, to help you grow your business in your area, especially in the first-time home buyer market, focusing on low to moderate, home buyers. You'll be able to, focus on industry trends, get key topics and that will drive business and empower your clients. So again, great, website to go on, check it out, and hopefully you'll subscribe for it. Credit Smart Financial Education. We are really, really hyped on this. It's been around for 20 years, but again, it's free financial literacy, for your client. It's a curriculum that offers, modules, so it's done online. It can be done, at a self-pace. Doesn't have to be done in all in one sitting. It features topics on, how to manage credit, money management, home ownership, foreclosure avoidance, and much, much more. We also offer the Train the Trainer in Credit Smart, and this is a really, really fabulous tool for any real estate professional who wants to really, really make an impact in your community. You can go through our Train the Trainer program, become a certified Credit Smart trainer, to where you can sit down with one or a group of people in your community and teach them financial literacy. And I guarantee you that the people that sit down with you will really, really find it a valuable experience, and you will get referral business from it. So if you're interested in becoming a trainer in Credit Smart, please reach out to me, and we'll get you off onto the road of being a Credit Smart trainer. And also part of the Credit Smart suite is the Homebuyer U. Now, where Credit Smart focuses on financial literacy, Homebuyer U focuses on homebuyer education. So again, this online program fulfills the first-time homebuyer education requirements for all of our programs. It's 6 modules. Again, it's fantastic. I just got notified it's also available in Spanish. This slide unfortunately says it's offered in English only, but that's hot off the presses. So if you have Spanish-speaking clients, they can also go through this great tool. And again, it's free. So if you want to get in contact with me, my name is down at the bottom. My email address is there. My phone number is there. Feel free to reach out to me. I will, get back to you on any question that you have. And at this time, I'd like to thank you for, taking the time to learn about what Freddie Mac is doing in the affordable lending world and our partnerships with housing finance agencies. And I would like to turn it over to my friend and colleague at South Carolina Housing, Claude Spurlock.
Well, thanks, Jim. I appreciate the information that you just gave us. This is Claude Spurlock. I'm the Business Development Manager for SC Housing, and really happy to be here to tell you how we can help you get more clients into homes, which that's what you want to do. We have 3 basic programs at SC Housing. We've got our bond program, our Palmetto Home Advantage, and this summer we'll have a new MCC, a mortgage credit certificate tax program that'll be out this summer. I'm going to talk about the highlights for our bond program first. And this program is an FHA, VA, USDA, or conventional program. It is a first-time home buyer program. And in South Carolina, there's two types of counties. We've got 12 non-targeted, which means in these 12 counties, it's in the middle of the screen right now, you can't own a house in the last 3 years, with 3 exceptions of single parent, a true single parent with a child under the age of 18, a veteran that's been discharged last 25 years, and also someone 100% disabled, which means themselves, their spouse, their children, or their parents can also qualify and will waive the first-time home buyer in these 12 counties. The other 34 counties in South Carolina, the definition of first-time home buyer is do not own a house at the time of closing. So using Richland County as an example, I have a house in Richland County. I sell it at 10 o'clock, and I buy a house in Kershaw County, which is targeted. I'm a first-time home buyer. As soon as I sell that house in Richland County, I became a first-time home buyer for Kershaw County. I can sell my house in Kershaw and buy another one in Kershaw, and I'm a first-time home buyer. But you cannot go from Kershaw to Richland because the rule is 3 years in that county. So that's how these 12 counties work, and all the others in South Carolina. You have to be a U.S. citizen or be here on a green card to be able to buy a house through our bond program. We do have income and house price limits, and those are listed. We'll send you a list of those, and the chart looks basically, this is it. And we have 2 types of down payment. We have a 10-year forgivable and a 20-year forgivable. And how you tell the difference in the two, say in Richland County, you have if the total household income, everybody that's 18 years older and lives in a house is 58.1 is less than that. The house price is less than $225. You get a 10-year, $7,000 forgivable down payment. No payments, no interest. It just sits there for the 10 years. If you're over that income limit, you'll go to the next chart and say Richland County, 1 or 2 persons can make $72,600. 3 or more can make $83,490. Buy a house up to $300,000. So here again, that's not bad. $300,000 on a house and get down payment assistance. This one will be a $7,000 forgivable for 20 years. If you're above that is what your income limit. So you're below these numbers, but above these is 20 years. Up to these numbers, it's a 10-year forgivable down payment. And always check every county, because you look down at Berkeley and Dorchester, it goes up to $113,000, $114,000 in Beaufort. So every county is different on the income limits that we have. Then we have, of course, our Palmetto Home Advantage that has even more additional income that you can get qualified on. So now, standard loan, 30-year loans, standard 97% conventional, 96.5 FHA, 100% USDA, 100% VA. All those can be used with our program. Any type of property can be financed, except for mobile homes. We do off-frame modulars, but no mobile homes. And we can only do 1 parcel with a property, and it cannot be over 5 acres, just to let you know on that. Just to let you know, they get an automatic 60-day rate lock on all our existing construction. We actually have a 120-day rate lock on new construction. And with that, you get a one-time float down. So if our rates drop anytime during construction that someone has locked with us, we can drop that rate one time up to 2 weeks of closing, and you can get our best rate possible. So, which is a nice option. We will need tax returns for clients, and it will be used automated underwriting on all files will be used. No manual underwrites are allowed. Credit score, 620 for our FHA program, 640 for all other products. And we use the standard requirements on 3 scores, use the middle score, 2 scores, the lowest score. We don't worry about collections as long as it gets through the automated underwriting. Qualifying ratio is 45% across the board. And we do have reduced mortgage insurance for conventional loans at 25% on a 97% loan on this product. There is no cash requirements or reserve requirements on it. So you can have a client that has basically very little money in the bank, use our down payment assistance for the down payment, have the seller pay the closing cost, then get to a money with very little money out of pocket for their loan. The down payment we've already talked about is $7,000 in down payment assistance that's available currently on this program, and is either 10 or the 20-year forgivable. The borrowers will have to take homebuyer education. And here, Jim already talked about the Credit Smart. That's free. You go online and take that, or framework through Fannie Mae's website. You can use either one of those, can now be used for state housing. We do have some, there are fees and costs that are additional on our loans, $400 for SC housing, and every loan will get a 1% origination fee. So kind of take that in consideration when you're talking about the fees that the seller is going to pay on here. And we have restrictions on the insurance at 2.5% or $2,500 deductibles is what we require on our mortgage insurance. CO100s are required on all homes that are existing, and that can be done within 45 days of closing on that. And that's the very basics for our bond program that we offer. I know this is very quickly. We will have all of these program guides available through the State Association of Realtors. Will have that for you. Now, we have a special going on that it ties to this program called County First. And what it does in 20 counties, in these 20 counties that are right here, it gets $8,000 in down payment assistance and 0.25% off our going rate. Today's going rate is 3.125, so you get 2.875 fixed rate if you are selling a house in one of these 20 counties, $8,000 and the lower rate. And this is supposedly should be available all through 2021, is what I've heard from management. So we're real excited about being able to offer that. Also, with this, when this is, when you see this, we'll have a Palmetto Heroes program will be out. It will have a $12,000 forgivable down payment. And the rate will be set on a daily basis on that, but $12,000 will be available. And this will be for firemen, policemen, National Guard, current armed forces personnel, nurses, CNAs, correctional officers, firemen, which is both part-time and or full-time, and volunteer firemen will also be available, and teachers. These will be certified teachers in South Carolina. So a lot of people will qualify for this program, and it will have a $12,000 forgivable down payment. This is going to be forgivable in 10 years on all income limits that we offer. So that will also be available very soon. So we're real excited about that. So please watch for that program guide. Now, our program that we partner with Jim is our Palmetto Home Advantage. Our Palmetto Home Advantage program has been revamped this February, and we just rolled it out. And it also now has an FHA, VA, and USDA, along with conventional Fannie and Freddie programs. This program is different than our bond. Our bond is first-time home buyer. This program is for first-time home buyers, move-up borrowers, repeat borrowers, and someone has a house that they love. It has a great rental potential. They can keep that house as a rental and then get our down payment assistance to buy their new primary residence. So a lot of options for a lot of people on this program. This program, even FHA, will allow for a non-occupant co-borrower, is also available through FHA on this program. The house price limits, we use the standard Fannie Mae, FHA, USDA, or VA house price limits. Whatever they allow, we will allow on this program, where it's capped on 300,000 on our bond program. These are 30-year fixed rate loans, standard loans, 97.5 conventional, 96.5 FHA, 100% USDA and VA. Everything, of course, is a purchase on all our programs. The income limits, now on for our conventional HFA program through Freddie Mac, it's 80% AMI. And what a lender will do, they will use these lookup tools here, put in the property address, and they will get what that number is. On our government loans is 98.9 income limit. And the nice thing about this income limit is just for the borrower that's on the loan. So just qualifying income is what you use on this program compared to total household income on our bond. So a lot more people can qualify to get down payment assistance with this program. The eligible properties, any type of property except for any type of manufactured housing cannot be used, but any type of other properties can be used for this program. Rate locks here again are 60 days across the board on all loans. It'll be through automated underwriting through DU, desktop underwriting, or LPA through Freddie Mac, or either GUS if you do a USDA loan. This is one of the nice things on this program also is the DTI. The DTI for 699 and below is 45%. Above 700 credit score, it's 50%. So, which is another great option for your borrowers. And we're seeing our average house price limits are up to like 180,000 on this program compared to our bond that is more like 150,000, 140,000. So we're seeing a lot more house prices on this one than our regular program. And Jim said earlier that one of the nice things going conventional on this program to make it more cheaper than FHA will be going through the conventional with the lower MI. On a 97% loan, it's 18% coverage compared to 35% on a standard loan or 25% on Home Ready or Home Possible. So great option. And if they put 5 or 10% down, it goes down to 16 or 12%, which is, I mean, almost no MI compared to the 35% on a regular loan. The down payment. Now, the down payment is a little different on this one. We have 3 options on this program. You've got a 0 option of down payment, you've got a 4% option, and you've got a 5% option. And this is either of the loan amount and not the sales price. So say you have a client that is going to finance $300,000 at 4%. They get $12,000 in down payment assistance that's forgivable in 10 years with no payments, no interest. It's just forgivable after 10 years. But they're getting $12,000 on a conventional loan. They only need $9,000 for their down payment. That leaves him $3,000 for closing costs. They do the 15. That gives him the $15,000. The 5% is $15,000. That gives him $6,000 for closing costs. So easily get into a house with no money down. Our biggest option on this is a 0 option, where the rate is a little bit cheaper. On government is I think 2.625. That does change daily, so it can change on you. Compared to 3.5 for a 4% and 3 3/4 for 5% on this. And so it's really a great option for you to get a person in a house with very little or no money down at all with the program. Here again, homebuyer education will be required, at least one person in the household, just like our bond. And the fees and costs will vary by the lender on this, but it's standard information on here. Property insurance is standard Fannie Mae, Freddie Mac HUD requirements. And the nice thing about this is how it's approved. On our bond program, and we get a lot of flack that, it takes so long. Well, we're on a 48-hour turnaround on most days on our bond program. This one, if everything is done properly, it takes an underwriter about 10 minutes to approve a file on this program. So they normally get it back within an hour or two of receipt with our Palmetto Home Advantage program compared to our bond, which is about 2 days. So if anybody tells you that don't do estate housing because it takes too long, they haven't done one in the last 2 years, because we are very fast on our approvals, and things close. Most of our loans close within 30, 45 days max on most of our loans. And it's up to the lender to get the file to us in a timely manner to get that thing closed very quickly. The last thing we have is our, and I'm not going to pull that up, but the MCC, the Mortgage Credit Certificate Program. This program converts your interest on your mortgage from a tax deduction to a federal tax credit up to $2,000 a year for the life of the loan, for a one-time fee of $800, which is huge. You think about that. Someone could max this out for the first 10 years of their loan. They get back $20,000 in federal tax credits that they could get. Now, right now we do not have this available. It will be available, we think, sometimes late summer, and then it'll be available for several years after that with the issue that we're asking for. Just waiting for the state to get all the stuff together so we can have the MCC. But it's a great program. And say you have a client that is a little challenged in getting approved, they can actually use their credit that they're going to get on the MCC to help qualify them for the mortgage by adding, say they get the full $2,000, you divide that by 12. That gives, that's $166. They can add that as their as additional monthly income on their loan application for approval. So it's really cool, and it meets all the same as our bond requirements is how you would qualify for that program. But a lot of cool things that SC Housing does and has. If you need assistance, we're more than happy to help you out. They'll have my contact information will be on here also. And if you want training, your office needs state housing training and wants to get certified, I can come out to your office, I hope, very soon, and do a training class for about an hour. And you get on our website as an approved state housing realtor. Just one more place to get to be on, and it's free for us to do that for you. We'll also have training classes throughout the state. There'll be group trainings this summer. Sometimes we'll have that available also. But if you need assistance, please give me a call. A lender tells you something that you don't understand or sounds crazy, give me a call and I'll be glad to check into it for you. And especially if a lender tells you that we've had the file for weeks at a time and can't get an answer, that's when you call me so I can get involved with that, because a file in our office gets an answer normally in about 2 days, 3 at the very max. So that just is not right. But anything we can do at SC Housing to assist you in getting houses sold, that's what we're here for. And I'm always available to help you out anytime. So thank you all very much for having me, and let me know if I can help you.
Thanks, Jim and Claude, and all of our speakers today for the value by completing each step of the diversity challenge, including the Fairhaven Fair Housing Simulation at fairhaven.realtor, the implicit bias training available at nar.realtor, and NAR's At Home with Diversity certification, also at nar.realtor. You can even download the manual in the download section of 2.5 hours of ethics, professional standards, realtor training. Stay tuned to the SCR Facebook page at facebook.com/SCRealtors, where we'll announce our door prize winners. We're excited to give away a number of gift cards and our grand prize video conferencing package, including camera, microphone, and lighting, so you can look your best on every Zoom call. Well, that wraps up our Fair Housing Conference. Thanks for being here with us today, and have a fantastic rest of your day.